Good Thursday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamonik. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with a disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. There's the disclaimer.
Excellent.
And I'm going to share my screen as I'm doing that. If you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, the analytics. If you have a question, type it into that live chat on YouTube. We'll read them back to me. If you'd like to come on a show and ask your question live, you could click on that link to Zoom on that live chat. Once you get into Zoom, click raise your hand. That lets us know that you have a question. We'll let you in. You could ask your question live. To give you guys a couple minutes to type those questions into the chat box. What we'll do is go over the pre-market report, see if we could get insights, what's trading at pre-market hours, and then we'll move on to the questions. Okay,
Perfect.
so pre-market report, these are stocks trading in a pre-market hours. We'll start out with this calendar view we have over here. This goes back in time. Let's just look what traded in pre-market hours historically. Right now we're on November 2nd. So from a high level, we could see so far there are 663 stocks trading higher in the pre-market hours, 182 stocks trading lower. If we look at the volume, we got 143.5 million shares trading higher versus 45.3 million shares trading lower. If we convert those shares to dollar value, we have $4.8 billion worth of stock trading higher, $528 million worth of stock trading lower. So far, that's a pretty strong bullish sentiment in the pre-market hours, especially even if we look back days over here, you could see that 600 versus 182, and we got $4.8 billion worth of stock already trading higher, and we're still like a half hour away. So pretty bullish sentiment in the morning, and that's coming after the Fed yesterday held rates, and I think that the inference the market is having that maybe they're done raising rates. I don't think the Fed said that.
They didn't say that.
Yeah,
But
I don't think that they said that. But I think this is the second pause in a row, right? And maybe they're looking at something and thinking that this is done. The inflation is trending their way. So they might hold the rates here for a while, but I think that's the inference the markets are having. At least they didn't raise it. And you see the long bond, the yield on the long bond actually started to come down. And oil prices are down. So far, after last week's sell off, the market's coming back. And we'll
I
take
don't
a
know
look.
where I don't
Take
know
a
where
look.
oil prices are down in my life. I mean, it still costs
It
me a
doesn't.
fortune.
Yeah, they
Fill
hit.
up my car. I
Yeah,
just I
they're
just
they're.
priced propane and it's like over $3.
Yeah, you don't feel it in the. Yeah,
No.
we're definitely not feeling that, but in the futures market, they've come off their highs.
Yeah.
Um, and November historically is a strong month for the markets. We could take a look at it, but
Yeah. How would we see that?
um, I'll take a look at it after
All
we'll
right.
use SPY. So let's look at it from a couple more perspectives, and then we'll move on.
All right.
If we come down here, scroll down here, we have a list of our most active stocks in the pre-market hours, our biggest percentage gainers, biggest percentage decliners. See, 233 stocks made our percentage gainers list, 54 in the decliners. So that as well is indicating a bullish bias, right? In the morning. But we do have small cap stocks in here, leverage products, ETFs. So to narrow down this list, we could use the filters here up top. If you have a watch list, you could narrow it down by your watch list. We're going to use this one, an ETF. When you click on it, you get these ETFs to choose from. And let's pick the top one, SPY. That's the S&P 500 ETF. And when you click on it, the list below will reload and get filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. And here we could see 55 stocks made our percentage gainers list, 8 on our decliners. So overwhelming right now, the trading in the pre-market is very bullish. So you could see here these E's, these are earnings, right? So these are all have been reporting earnings, and a lot of them are reacting to that as well. But nevertheless, I mean, you got 55 versus 8, so big, big imbalance towards the bullish side so far in the pre-market. Well, we talked about, let's just go right now just to take a look at SPY and how the market tended to do in the month of November. So we'll use SPY as the S&P 500. And if we come over here under tools, we could look at seasonality. And when we bring that up, here's November right now. We just started November. We're on November 2nd. And if we come down here, we could see that historically 90% of the months, calendar months in November, have been positive, right? 10% negative, 91% almost. So you could see here almost all the time, maybe not this one, but it's been positive the month of November. So whatever reason, we have maybe better earnings, more money flown into the markets. But that has been, in general, I think it might be like, besides July, the strongest month of the year, right? And we're already up 1.1% for the month, not including today, and we're just like a day into it. That's where you could come just to see historically, the seasonality trends in the market. So tended to be very strong month, the month of November. I guess, I could take some questions. I think
we had one question at the end of the day. Yeah, well, it's mid show yesterday from a new user, and she was asked, I think it was Sandra, was asking, can you screen for stocks in an uptrend?
Yes. So stocks in an uptrend. Yeah, so let's go to the stock screener. I'm going to come up here. These are stocks, right? Under screeners, I'm going to go to the stock screener here. And I believe, in the screener, you have the filters above and you have the data tables below. And in this data table, you have different tabs to choose from: performance, technical. So I think under this, hold on a second. Was it under the, okay, so under the summary here, actually, the first tab, it gives you an indicator, technical indicator of where the stock is currently. And this this one is using moving averages, right? So how do you identify first? Let's first identify an uptrend, right? Because the question was an uptrend. So here Microsoft's in an uptrend. And then we're going to go back to this screen. But let's bring up Microsoft. I'm going to bring up Microsoft here. Okay. And let's go to the charts because it's the easiest place. And I'm going to go back for 1 year just to show you guys how do we know that, this is an uptrend? That means you have to have a way to measure it and identify it, right? And really, an uptrend is that the stock's moving higher, right? It's kind of just moving higher. So one way the way we identified it, we started looking at its moving averages, smoothing it out, right? So if we take the 20-day moving average and we plot it, so we could see here right now, the stock itself is above 20-day moving average, which, that's one way to measure it, but it might not be enough because you could see here that the 20-day moving average, the stock will kind of bounce around it, up and down. So let's bring in another moving average. Let's say 50-day. So now we got the 50-day moving average. And here what we see is two things. It's the stock is above the 20-day moving average. It's above the 50-day moving average. And on top of that, here we could see that the 20-day moving average is above the 50-day, right? So the 20-day is getting pulled up above the 50-day moving average. So those are three things, but let's go to the longer term, right? Are these moving averages getting pulled up over the longer term, 252-day? So you can see here, they're all above the 250-day. So all these indicate that right now the stock is moving in an uptrend because all its moving averages are getting pulled up higher, and the stock is also trending higher above all its moving averages. All right, so that's the uptrend definition. So how do we screen for those then? Is the question. Like, how do we screen for those conditions? Right, so those are the conditions you're screening for. So I'm going to come back here. So we have this stock screener, and this is the uptrend, right? In Microsoft, and we're looking at, well, just show me all the uptrend stocks, basically, and with the similar conditions that we just saw. So we're going to have to use these filters here, and I believe under price, volume, and technical, right? So your price, volume, technical. If we come up here are the technical indicators, right? If you hover over it, it describes it. And if you click on that filter, you get to choose from those indicators, that we gave names to. So let's say uptrend, that's the one we're looking for. You click on that. And now the list below will show you all the stocks in an uptrend, the way we define it, right? So 672. So you could see, going down, these are sorted right now by, I believe, market cap. So the default is market cap, but you could resort these. And these are the stocks in there, but let's say we wanted to filter down further, maybe show me the uptrends, and it has to be in the S&P 500. So let's see how many stocks are in the S&P 500 and meet these uptrend, conditions. So we could come up here, and we could use, just like we did in the pre-market, an ETF. If I click on that, get these ETFs to choose from. So SPY, that's S&P 500 ETF. If we click that, what will happen is now we have stocks that are in an uptrend because we still have this filter set. right? And we also have stocks that are in the SPY. So now we have S&P 500 companies that are in an uptrend. So you could see there are 34 that met these conditions, and sorted by market cap, we have Microsoft, Meta, United Health, Adobe, Vertex. So here we go. Cigna. So that's quickly how you could sort, scan or screen for stocks that are meeting those conditions or in an uptrend. So I think that was the only
Yeah,
condition.
no, that was perfect. Hopefully, I don't know if Sandra's on, but that was a great explanation. Actually, I thought you were going to have to go to the header and actually click on the header. So that's great that you can dig in and actually just have all the uptrend stocks and not have to search through.
Let's see. You could do it in, NASDAQ. Let's do the NASDAQ ones. So these are NASDAQ stocks. There are 10 in uptrend. So we can see Microsoft, Meta, Adobe. These are the ones that are hitting those specific conditions.
Now, while you're on the screener, I don't know if this is something available. I think actually you may have even talked about it a couple weeks ago, but Jackie's asking, Will, can you ask Dimitri the question, does MC have tools to search and screen? And obviously this is it's hard to say undervalued and overvalued stocks, right? Everyone has to do their research and determine that. So
right.
I don't think we have a screener, right? I know you can look at the fundamentals. We do have some analysis based on some different tools.
Valuations?
You can do valuation, and it's a starting point, but we don't have a screener for it, correct?
Yeah. What was the question? Screener.
It says, Will, can you ask Dimitri the question? Does MC have tools to search or screen undervalued or overvalued stocks? Thanks.
Yeah. So specifically, with the undervalued and overvalued, this when we define undervalued, overvalued, these are things that are in the stock market a matter of opinion, right? Obviously, there's going to be two sides. There's always a matter of opinion, right? If something's undervalued, if everybody agreed something's undervalued, they would drive it up to the fair value.
Well, at the end of the day, it's always a fair value at that end of that day, right?
Right.
At any moment in time, it's what people are willing to buy it and sell it for. I mean, that's
right. Yeah. So the market is a competition of different models, right? Different models, different opinions, different interpretation of the data of what might be undervalued and overvalued, right? So there's we can't tell exactly what is an undervalued and overvalued, because it's how you interpret the data and what metrics do you want to use to determine that. Okay, so in a stock, when we took, like, for example, there's certain things like an ETF, you could calculate the net asset value, and you could compare it to the price, and you could say if the price is undervalued or overvalued relative to its NAV, net asset value, right? That would be like an easy example, because there's a intrinsic value, right, to it, that and an option, there's an intrinsic value. So we could say, like, if the option is trend below parity, it's definitely undervalued. But then, when we talk about undervalued, overvalued, it has to be relative to what. And when we talk about stock prices and specific, like a stock value, there are many different models, even valuing the same stock, right? Even valuing the same stock, there could be very different, not only models, but different opinions how you should value it, right? Like, how should you value it based on estimating future cash flows, right? Future cash flows discounted, right? So if you use that model, you still have to make an estimate of future cash flows, which many people will have their own opinion, and those are projections, right? These are guesses. So if we use that model, the discount cash flow model, okay, we have the model, but we need to put assumptions and inputs into that model. And when you try to estimate future cash flows, it's a guess. You're using data and stuff, but you're trying to guess very far into the future. Not one, you're not talking about 1 quarter or 2 quarters. You're trying to go very far into the future, and it's very hard to estimate. There are certain stocks, like Warren Buffett likes to buy, like where the cash flows are more stable and more predictable, I don't know, like Coca-Cola or something, but that's not always the case. It's not like that for every company.
Yeah, and variables change, right?
And the variables change.
Like you look at what's going on, and we haven't really talked, well, I don't know if we've talked about it at all, but these new weight loss drugs that are coming out are now affecting fast food. People are changing their models, right? And how will Ozempic affect Yum Brands or McDonald's or Cracker Barrel? Like, Hershey, they're all these models that are constantly changing, and at times probably overshoot, right?
They'll overshoot and undershoot, and there's like really, so when we talk about the value, right, the value of something, it's never an exact number. First of all, there's no exact, you could get an average, and around that average, you have a good case scenario, you have a bad case scenario, you have probabilities of it going here. So there's no exact number to do it. And when I talk about, another model could be a relative value. What should Microsoft, for example, be worth relative to other companies, the way they're valued in the market, right? So if you would take similar companies with, similar businesses, and are in the technology space, and have this brand, this moat, whatever, how can we measure Microsoft relative to those companies and see how far apart they historically trade versus each other? So, like, for an example, if I was trying to price new homes, right? If I was trying to price new homes, I might say, well, new homes usually get a 30% premium over existing homes, right? So if you have a brand new construction, they trade at a 30% premium to existing homes. So then I could estimate, well, here the existing homes are X amount. So then my estimate is that if I build a new home, this is what it should be worth around, So that's like a relative value, where you're observing the valuations of something that is similar and relevant to put a value to this. So there are lots of different ways that you could value a stock. There's no exact number to it. Usually it's in some kind of, you could have a range, and sometimes the ranges could be very high, right? You could say, like, well, based on my best and worst, my best scenario, worst case scenario, Microsoft could be on the worst case scenario $250, and the best case scenario, 450. So the middle is, whatever that is, 350, I think, right? So screening like that for over undervalue with stocks, it's very difficult. Okay, it's a much harder, in my opinion, way to price things, and there's no even one way to apply it across industries. Like, biotech stocks have their own way of getting priced. Tech stocks have their own way of getting priced. Sometimes people are pricing stocks not based on even, cash flow they're pricing based on like how many, people are they signing up, right? Like how many subscribers are they growing at, even if they're doing it at a loss, right? Like even if you're adding customers at a loss, the market could put a valuation on that, saying, well, eventually those customers will turn to profits. So it's very difficult to say, what is the value of the stock. What you could do is just take models and play around with different models to say, if I put this assumption and this assumption, in theory, what would this stock be worth? Like maybe we could take a look at Microsoft here and say, okay, well, what if I did the following, right? If I looked at historically, right? If I took the historical PE ratio for Microsoft for the last 3 years, if I took the historical price to sales ratio for the last 3 years, price to book ratio, all these, and then I compared those PE ratios relative to the markets, right? And I did all this, so I get all these different potential implied values, right? So if I only use this is the implied value. If I only use this is the implied value. So I get all these different potential prices, right? You could see here, all these are different assumptions. Now you could just look at one of them. Here we took the average of all of them and said, okay, if I gave all of these equal weight, because I don't know, I don't know if I should give more, just look at P alone. Should I look just to price to sales ratio, price to book, price to operating income? Should I look at the, Microsoft's PE versus SPY's PE and see the historical difference, right? And give that weight. Or if I give them all equal weight, if I just give them all equal weight, that's an assumption. And if I gave them all equal weight and took the average, right, what would be the implied value? And then I could take a look at it, how far away the market is from that implied value, right? So the market's 346. So I don't know if, I have as high as 388 here in this model, 374, So again, these, and I could remove these. Maybe I could say, well, I don't need price to book, that's not relevant. Maybe I don't need price to sales, that's not relevant. So now I just change the model, right? Or maybe these are the most relevant. So again, you could see here, we are putting in assumptions to get we want a benchmark, right? We're trying to get a benchmark to say, well, how far away did the market itself move from this historical benchmark where it used to trade? So that's one way of doing it. Now there are other ways, we could talk about. I mean, there's many different models, but I think we're right up at 9:30. So I'm going to stop there. But it's a good conversation piece, and it's great to discuss different models and how to say, if we apply this model and use these assumptions, where do we think the price should be around, and then compare that to the market price to see how far away it moved.
Yeah, again, it's another place to start to do some research and build a theory that may lead to a trade, right?
Right. But you cannot come up with an exact number and say this is exactly what it should be worth, right? Because you can't redeem it, right? It's not like
it's not like you're going to capture that 2.2% premium.
There's no way, because there's no way to short this, buy this, and redeem it, right? You can't do it that way. You can't arb it. So you're just using benchmarks to be like, okay, where do I think it should be around? And how far away did it deviate from that price?
All right. Great job, my friend. We will continue this tomorrow, same time, same place. Great job.
Yep. All right, everyone. Thank you for joining. Stay safe out there. Have a great trading day. And